Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Monday and it is the 16th of January, I beg your pardon. My name is Russell. I'm a senior market specialist at FXCM. My email address is r@fxcm.com. Just going to go ahead and bring up the high risk investment warning. And as always, I just want to double check. Can you guys see me, hear me, and see the screen? Can I just get confirmation of that? Okay, excellent. Thanks, Cedric. Joachim, thank you very much. All right, let's bring up the market commentaries disclaimer. So today is going to be, I would expect, a slower day. It's Martin Luther King Jr. Day in the US. It's a federal holiday, so by and large, most things I think are going to be closed. So liquidity should be lighter today than usual, so just be aware of that. We'll take a look at market scope and trading view. Hi Howard, I did have a fantastic weekend. Hope you had one as well. Thank you very much for joining. And I want to show you guys just a few things on trading view, and then we'll just do some standard analysis on market scope. So we'll start off just with our real rate. This is something that I don't think is going to move today because of the public holiday in the US, but you can see the real rate very much subject to this flag continuation. Another way we can take a look at this, just by the way, is on a longer term chart. So instead of taking a look at this on a daily, what we can do is just go through to a weekly chart. And this is an interesting way of looking at it as well, because we can start putting in our peaks and troughs. So what you can do is you can put in your peak over here. Okay, so we can put in a peak here. We can put in our trough here. Okay, so once we've got references in, we can start monitoring just what's happening with the real rate. Just to give you an idea, real rate is the nominal rate. Everyone should be familiar with nominal rates. If you go into a bank and you speak to a bank teller or a banker, they'll be talking about interest rates. They'll be talking about nominal rates. In other words, it includes an adjustment for inflation and expected inflation. What we need to be taking that out. We're taking the nominal minus what we call break even, and then we get what's called the real rate, which is very much influenced by economic conditions and monetary policy. And we can put in here a lower peak. Okay, and so once we've got the lower peak in, you can see that it does seem as if the real rate has stopped moving to the upside. If it breaks below the trough over here, then we've got a technical downtrend, a lower peak followed by lower trough. We don't have that yet. And just an idea of what I think is going to happen this week. We're going to have to monitor this and adjust as these take place. I think there's about 8 federal officials that are going to be speaking this week. The next rate announcement is going to be on the 1st of February. So we're going to go into a dark period, sort of the blackout period, where there's no communication. The fact that let's just go back to the daily chart, the fact that the rates have been coming down, I think is going to be not very popular amongst Fed officials. So there could be some talking up of interest rates this week, so just be aware of that. And if they talk interest rates up this week, that will filter through to other markets. Nevertheless, okay, despite what happens this week, we do have this lower peak. And what would be interesting is if we get a lower trough or if we get a higher trough. So we've got to kind of got to monitor what's going on at the moment. Now, why I think that the lower trough is a distinct possibility, and I'm going to tag on that subject to correction, is because when we take a look at the median inflation, so what we have here is median inflation. and it's this black line. Yeah, it's actually rolling over. It represents the sticky inflation. It's still in zone 1 between the upper red and the upper blue. So on a technical basis, it's still not quite where we want to set. We want to set cross below into this neutral area. That would be quite something. Now, it's quite an interesting chart we're looking at. I've got the rate of change of the median inflation here. You've just got to understand that the median inflation is already a rate of change. So we've got a rate of change of a rate of change. So it's what we call a second derivative. So we're looking at the acceleration. So here we're looking at the rate of change, the momentum of median inflation. It's starting to top out, which is encouraging. It's the sticky stuff. But then the acceleration is really coming down, isn't it? So the fact that this acceleration of the sticky stuff is really starting to come down, I think is one of the, if not the core reason why we've got the lower peak coming here. Now, there's no doubt that conditions are loosening up. The Fed is not going to enjoy that. Just be very careful. There are a lot of speakers this week before we go into that sort of blackout period. And that could cause some volatility this week. Having said that, let's take a look at some of the charts and just do an analysis there. I'm going to bring this one up first. This is the DAX. This is the weekly, so we'll do a top down. This is a really good looking chart. It's a higher trough, higher peak. Okay, there's the uptrend in the DAX on a weekly basis. Very good to see. If you take a look at the RSI here, it's above 50. As long as it holds at 50, we're on the bullish side of the momentum indicator. Now, assuming that there is some sort of hawkish speak. Now, I don't know how the market's going to react this week, but I would suspect that the Fed officials are going to try to tighten up conditions. And if they do, we might get this sort of pullback. Again, I reckon that would be healthy because that would set up the next higher trough, which I'm going to put as a question mark because this is obviously speculation. But if we get that higher trough, well, then that sets up the platform for the next higher peak. And that's how the markets ebb and flow, right? This is obviously guesswork here. The only reason I'm saying it is because of the fact that we're going into this dark blackout period. So we have to be very cognizant of that. But if we sweep that sort of aside, this is an uptrend. And if we go through to our daily chart, we're sitting really nicely in zone 1, which is the upper red, upper blue. We've also got a momentum in the upper quintile. As long as it holds that upper quintile, the pressure's to the upside. Let me just show you what I mean by that. Here it holds the upper quintile. Okay, the upper quintile means the top fifth. Okay, the top fifth of the stochastic. Well, once it holds the top fifth, we got a real good underlying momentum there. And you can see what happens when we have a strong underlying momentum. It pushes to the upside. Now, again, there is some warning signals here that are starting to just peek in. And I think it's worth just having a chat about that. The candlesticks here are actually getting smaller in range. So you've got a nice long range candle here, you've got a nice long range candle here, you've got a nice long range candle here, and then they're starting to get a little bit smaller in nature. And you can see as we get smaller in nature back here, that was kind of the end of the swing. So we might be getting sort of to the apex of swing here. Again, probably more healthy than anything else, just to get this higher trough in. It does set us up into a risky environment. So if we go down to the H1 level, the question now is, are we able to take advantage of pullbacks? So we can't forecast the market. We're not forecasters, and anybody that can forecast the market, okay, would be a miracle worker, because it's not possible to do it on a consistent basis. So what we can do is just work the methodology. So we do have a pullback towards that central pivot, okay? And the central pivot has a nice overlap of resistance, 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 turn support, okay? Turn support. So, and now you can see there's a buying tail that's starting to come in as well. So I think this level is a good level to watch, even though, okay, there are market risks today. Let's just go over the market risks again. Lower liquidity because there's a public holiday on the US side of the pond, so to speak. And secondly, there is, I think, a distinct possibility that Fed officials try tighten up conditions this week as they go into the blackout period. So just be aware of that. I would still be watching the DAX. Obviously, we would want to see some angle and separation of the EMAs to the northeast, and we would want to see the stochastic crossing back up into its upper quintile. Let's do a similar analysis with the euro-US dollar here. Okay, go back to the weekly. Okay, let's just this HT question mark. We can take that question mark out. It's bizarre price action. It's actually very strong price action. We'll talk about it now. I just want to show you guys. We've got the higher trough, higher peak, next higher trough, next higher peak. So we've got the uptrend on the weekly. Take a look at the RSI. This RSI is above 50. As it holds above 50, that's the bullish side of the oscillator. Now this higher trough here, it's nice to get sort of, I want to just try and visualize this correctly. It's I think appropriate to get a number of candles that make your peaks and troughs. It's more ordered. There's a heartbeat to it as the sentiment of bulls and bears tend to make trends fairly regular. Again, when I say regular, not forecastable. I don't believe that's the case, but regular. This is just one candle down. It's got a lower, higher, lower, low. That still makes the higher trough valid. And then we've got last week's higher peak, which was simply terrific. So you can see that it's moved up. We're not overbought here, nor were we overbought on the DAX, by the way. However, the euro-US dollar would be susceptible to the same risks that the DAX is susceptible to. What are those risks? The blackout period, okay, and the fact that the Fed may try and talk the market tighter. In other words, we might see the real rate lift. If that real rate lifts, there should be a reallocation back into the US dollar. If there is a allocation back into the US dollar, then we get a pullback in that euro-US dollar. But again, that is speculation. We go through to the euro-US dollar daily chart here. It's again, I think, a terrific looking pattern here. We're in zone 1, which is the bullish area between upper red, upper blue. Take a look at the stochastic again in its upper quintile. Now, it maintains upper quintile. We get the swing. Okay. Maintains that upper quintile, and that's basically saying that price action is closing in the top fifth of our measurements. Now, another thing to point out here, there has been a squeeze here in the Bollinger's. Now, whilst price action is really not really forecastable, volatility is to a degree, say with a very caveat. You won't be able to forecast it in any exact measure, I don't believe. But what happens is when the volatility narrows, it's setting up for the next expansion. That expansion setting up for the next narrowing. So it tends to cycle. So you can see that it went from narrow into the into a nice expansion. This expansion may still be in force, so just keep that in mind. I've deleted the, let me just put those Bollinger's back. All right, sorry about that, just bear with me a moment. And here it's 20 and 0.75. So just, and every line, make that line. We go. All right, let's go down to the hourly chart here. Okay, so we're at the central pivot. Again, there does seem to be an overlap here of price resistance turning into support. Okay, resistance turning into support, support turning into resistance. There's actually, it's called the principle of polarity. Okay, so here we've seen the principle of polarity. Let's just go through that very quickly. I'll just use an ellipse. Resistance, okay, resistance turns support back to resistance. Dare we say back to support? I don't know if it holds, but it's clearly a level that the market is interested in, right? So this is about the 108 level, 108.3, let's call it, the 108.30 level. It's clearly the market interested here. So we would need to keep an eye on this level. If it breaks through, then obviously the S1 becomes the next level of interest for us. We don't want to forecast. I want to be very clear here. We want to see if the EMAs cross over positively. We want to see if the stochastic crosses over positively. If we do get that positive movement, okay, then we would need the stochastic to move back to its upper quintile. That would be an idea that there is an underlying bullish momentum. If it drops through to 20, well, then it's kind of look out below, okay, because then there is an underlying momentum. There is a strong underlying momentum, but it's to the downside. Okay, so that's the DAX and that's the Euro. Let's just take a look at two more. I want to take a look at the FTSE and I want to take a look at the pound. Just because the US markets are closed. Let's take a look at pound first. All right, similar analysis here. And this is a really good looking chart again. So we've seen some really nice looking trends. Higher trough, higher peak. Take a look at last week's price action. We can take this question mark out, okay? Because we've got what we call a reference candle here, reversal. There's three conditions. The first condition would be you need the lowest low in at least 3 candles. That's the sky here. Okay, that's the lowest low in at least 3 candles. And then you've got the price taking out the reference candle's high. And it's closing above the reference candle's high. So those are conditions 2 and 3. 2 and 3 actually a single condition. It's just when I explained this in workshops, I found it easier for people to grasp the 3 conditions as opposed to the 2 conditions. So I just want to repeat what they are. The lowest low in at least 3 candles. So here's the lowest low. You've got a candle with a higher low to its left. You've got a candle to the higher low with a high low to its right. Then you've got last week's candle that takes out this reference candle's high. Then you've got the close that closes above the reference candle's high. That's a potential reference candle reversal. That makes it a higher trough. The next question for us to test is it going to be a higher peak, which I suspect it will be, or is it going to be a lower peak, which would be surprising, but possible. Okay. The reason why I think the higher peak is in play here, as long as we stay above 50 with the RSI. Okay. Let's go down to the daily chart here. Now, this is another squeeze. I just want to, here's the squeeze. Okay, on the Bollinger, and this is quite raw, isn't it? It's very new. In other words, the expansion in volatility here is a distinct possibility, and I would suggest that as long as the stochastic holds above 80, okay, then the expansion in the cable volatility is certainly something to keep an eye on. again, let's just talk about risk here. What's the risk? The risk is that the central bankers, the Fed central bankers, talk the pound down, talk the dollar up. Okay, so be very cognizant of that this week. Again, we've got a nice example of price hugging the upper quintile. Nice swing, isn't it? Now, the real dark horse, before we get to the dark horse, which would be the FTSE, let's just take a look at the hourly, and you've got the central pivot coming into play again. So the DAX central pivot, the Euro central pivot, guess what? Cable pairing, central pivot, and you've got good examples here of polarity as well. Okay, keep an eye on that. We don't want forecasts. Make sure that the indicators are telling you that there is a bullish pressure here. If we don't get the bullish cross, and if the stochastic continues to fall down to 20, then this central pivot's under threat. Then we can start taking a look at the S1 level. All right. Let's just take a look at the proverbial dark horse. That would be the UK 100. So if I go all the way back to the 12th of May 2018, or the week of, this is the FTSE's all-time high, and we're within a whisker of it. Okay, so we're getting right near all-time highs on the FTSE, and we're not quite overbought yet, but we're tending towards that overbought. I wouldn't be surprised to see the all-time high acting as resistance. Again, I think I would see it as something healthy, where you've got some profit taking, pullback, setting up the platform, and then we've got a potential movement to the upside here, right? We go down to the daily chart here. Daily chart looking very strong. Here you can see what we're talking about. Here's the squeeze. Here's the squeeze. Here's the expansion. So now the expansion probably comes into some sort of lower volatility, perhaps suggesting that the all-time high is going to act as resistance there. Nevertheless, the day has started really well for the FTSE. We're getting the central pivot holding, okay? And what I'd like to see is the stochastic crossing up and holding in that upper quintile region. Then there is, I think, a underlying momentum here. FTSE certainly one to keep on the watch list. All right. Given that the US is having a public holiday today, just be aware that's also another risk, just to reiterate. So the risks, lower liquidity for today. Also, market participants may be positioning for a hawkish Fed talk. Just be aware of that. I think that's where we can potentially wind up for the day. Just before we do, if there's any questions, please go ahead and type those through. I'm looking at two monitors, so if I'm not looking directly at the camera, I'm begging your pardon. My monitor, the questions on my monitor to my left. Any questions? All right, nothing coming through. Let's wrap up here, guys. Thank you very much, and we shall have another session tomorrow morning. Have a good day ahead and a good evening. Thanks very much, guys.